This is the heavyweight regulation panel. Almost every session, I think I'm fair in saying today, has found some angle or question about regulation. How should the disruptors be regulated? Are banks regulated the right way? Are regulators too slow and lazy, not aware of the latest trends, holding back, retarding innovation, I think is the euphemism that's used. Are there innovative approaches to regulation around the world that we can learn from each other, as it were? And so to help us figure out what is the future of smart regulation in finance and set the new regulatory agenda, we have this crackerjack panel. Perhaps I'll start with Noor. You are a veteran of the US banking system, the international banking system. You've dealt with regulators in multiple jurisdictions. Can you tell me, when you look at, and you're in an interesting position again because of both the global perspective and also not being a money center bank here in New York, you see both the hand of regulation, but also the opportunities that are opened up by regulatory arbitrage and so on. What do we need to fix today in the way that we regulate finance?
Thank you. So I think we need to somehow separate, in the US at least, how regulation is driven by political wins. So regulation changed after 9/11. It changed after the credit crisis in 2007, 2008. And it's now maybe, hopefully, it might change in the other direction with the current administration. And before 9/11 and before 2007, it was a lot looser than it is now. So I think that's one thing that we could do in the US. And then the second is I think as long as the dollar is the reserve currency of the world, and as long as you need to clear your dollars through New York, I think the world has to, and apologies to the Bank of Japan here, but I do think that the world needs to acknowledge that the US is the lead regulator in the world. And so everybody sort of needs to harmonize with where the US is. The biggest tension, the biggest heartbreak, the biggest losses occur because separate sovereign regulators tend to not get that their banks are subject to US regulators. And there's this huge tension between, I have to clear dollars in New York, you're giving me this much space, but New York doesn't give me that much space, and then there's tension and lots of heartbreak occurs. So those would be the two big things that I would.
These are fighting words in Brussels and Tokyo. You know that, right?
I understand, right? Dollar clearing.
But we look to you to be a truth teller here, right. Noor. Well, why don't I, on the very a gentle provocation offered by our banker, maybe turn to our visitor from the Bank of Japan.
Okay.
Maybe I can ask you, Yuko, what do you think about this notion that Japanese regulation should dance at the tune of regulators in America?
All right. Okay, that's a hard question, actually. I am from the central bank, and I'm from the public sector, while I am not the regulator by myself.
Sure.
That's the friend JFSA, the Japanese Financial Service Agency, who is the direct regulator and who has the regulatory power to make the rules and regulations. And so far, what they have done is on the, I would call it on the relaxing side rather than on the tightening side. That we would love to welcome, as a public sector, we would love to, and also the Japanese nation, welcomes the innovation to improve the efficiency of the finance industry as well as the society and economy, so that our regulator has relaxed or amended some of the existing banking laws as well as the payment laws in order for the banks to coordinate more with the fintech startups as well as the fintech companies to be easier, to be easier to comply with the regulation. So that's on the relaxing side. Even though, of course, they are mindful about the balancing between the consumer protection as well as the other types of the regulatory issues.
So the approach in Tokyo is to encourage the big banks to
relatively speaking, yes.
Innovate, to get closer to the younger fintech companies
exactly.
and so on.
And also ourselves, maybe I am the head of the FinTech Center, which was like 1.5 years ago established within Bank of Japan. And Japanese FSA has done almost a similar thing by establishing the FinTech support desk, the support desk. which literally answers the question, any questions from fintech startups to the incumbent banks and whoever. I mean, they take the calls from the public. So that's also the promoting side of the innovation. And to assure you that not only the central banks, but also the regulators coordinate each other globally. Not really, I wouldn't call it America-centric, but globally we are coordinating each other. And you'll be surprised. I mean, how many international conferences and the forums, the private, public, we have amongst the central banks and the regulators discuss anything related to fintech. I mean, there's almost no single conference, which doesn't discuss the fintech on its agenda these days.
And just to stay with that just for a moment, because you have a very effective banking system, a traditional banking system, you can get cash in almost any street corner in Japan. Do you feel that this is holding back innovation with these fintechs? I mean, you just need to look across to China to see the leapfrog we've heard a lot about during the course of the day today. Yes. Japan, which is so innovative in technological areas, we're not seeing that in finance. Are you burdened with that legacy? And what do you do as a regulator, especially since you're looking after, not as a regulator, but you're looking after fintech? How does Japan overcome that handicap of success, of previous success?
It is a heavy burden, I would say. I must admit that. The legacy cost is really heavy. And of course, everybody has the tendency to stick with the historical success, I think. So is our finance industry, as well as the other parties in Japan. So the breaking points could be two. The one is the generation migration, because younger generations are more like the natural-born digitalized people, so that as they grow up, I'm sure that they will go for more or less more cashless and digitized society, digitized custom. So that's the generation migration is one of that. And the other is, of course, our interaction cross-border, especially within Asia. And elsewhere in Asia, we are observing leapfrogging. I mean, you want to call it leapfrogging, but the dramatic changes of the finance custom, the finance industry elsewhere, and we observe that really close hand, so that we can learn from there is what I hope. So that's those 2 points will be breaking points.
Great, thank you. Maybe Kabir, I'll come to you next. From your vantage point at Omidyar, you have looked at lots of emerging markets and what's happening with regulation of this space. Can you give us a sense? Now, we know about the disruptors and the free-for-all. It's been described as sort of a Wild West in some of the countries. What's happening on the regulatory side that gives you some cheer, that this is not simply the absence of regulation that's allowing innovation?
Vijay, there's one conversation, as Noor was saying, which is about more regulation and less regulation, and the pendulum swings. The other conversation is about the future of regulation, period. And we are seeing some things very exciting in emerging markets where regulators themselves are embracing new technology. So we can imagine banking to be data-driven, algorithmic, real-time, instant, customized. If we can imagine that, surely we can imagine that regulation and supervision of that will have to be something similar.
Yeah.
And definitely in emerging markets that's happening. We've been involved with an accelerator that we've set up for central banks. And 3 country central banks have been involved, where they are investigating and evaluating technologies, especially from startups. We were inspired by what the Bank of England did in a similar space. So
just to be clear, the acceleration is not for the central bank. It's for RegTech startups that want to serve central banks. Is that right?
The acceleration is on both ends. It's to educate, to help the central banks understand where they can, address challenges with new technology.
I see.
And then help them find those solutions in a way that is, suitable for them. And in the Philippines, for instance, they're going to look at automating all reporting across the banking sector. The CNBV in Mexico is looking at setting up a transaction monitoring system that they run for AML-CFT.
Yeah.
So that's very exciting. This is regulators themselves thinking about how they can change technology internally.
So that's a tool. what about the philosophy? Because you talked about the future of regulation. That's a very big statement to make. Is there a different way of thinking about the role of the regulator in some of the economies that you deal with that might give us something to think about here in advanced economies?
You know, someone said that the future is here, but it's unevenly distributed.
William
right?
Gibson, in fact,
William
on the
Gibson.
pages of The Economist.
There we go. Perfect. I must have read it there. So if you look at, let's take Singapore, for instance. They have set up a number of things. One of the things that they're doing that's very interesting, the Monetary Authority of Singapore, is hiring data scientists themselves. Right? So they are looking at their own role and looking at who they hire and the capacities they build internally, which points to this potential cultural shift that's taking place. Take the Financial Conduct Authority in the UK. They are investigating how they can issue new guidelines and new regulations that are machine readable and machine executable. Right? So they are changing how they actually issue regulations in a way that enables this new future.
So London, excuse me, pardon me, I'll ask for some water. These are sandboxes.
No, there's sandbox efforts
too. There are sandboxes also.
Yeah, there are sandbox efforts too. In fact, we did a study, and there are 23 sandboxes or reg labs. We like to call them reg labs all over the world. And there are 50 companies involved in them. Most of the
I get very
companies are
choked
in
up
the
talking
FCA.
about regulation.
Yeah, exactly.
It's a subject very near and dear to my heart. The woman I married
I thought I was
a
very
regulator,
complimentary
so.
of The Economist. You don't need to get emotional about it.
I'm conflicted because, as I say, I married a regulator, but then The Economist, we believe in free markets, so it's a great tension and that's to the heart of me every day. Now, more seriously, do you think, for example, to take the example of what you see in Singapore, is there something that can be expanded from this example?
Yeah.
It's a very small place. Everyone knows everybody. Can be expanded to a continental economy?
Absolutely. In fact, the origins of those kinds of approaches was here. It was with the CFPB here in the US with Project Catalyst. And that has inspired what are now, as I was saying earlier, 20 plus these kinds of sandboxes.
Right.
And they've taken off in those other places for reasons we know, right? There are different environments, there are less constraints overall structurally. And potentially what happens there will maybe cycle back. That's our hope. That'll cycle back into these economies, in the US in particular. And you're seeing that in the last year, right? So you had CFPB with Project Catalyst, now the OCC has an innovation office, CFTC has a lab. So you start seeing the spreading of this kind of approach to working with fintechs in the reg lab environment.
Well, that's actually a perfect moment to turn to Valerie. And the SEC has, can I call it a hub? You're listening now more than in the past. Can you tell us a little bit about what's happening on this front at the SEC?
Sure, and as the regulator in the room, I have to say that the views that I express are my own and not those of the agency or any commissioner or any of my colleagues. But
it may not even be your own.
With
The
that said,
disclosure is complete.
I don't know, depends what day it is. And also, it's a good point to make that the SEC doesn't regulate fintech or innovators or innovation. It regulates conduct. It regulates the implementation of technology into products and systems. And so, to say we regulate fintech, I think it's a little bit off point. And I think if we were to take an approach that's too aggressive when technology starts to come in various ways, I think we try not to be too precipitous because we could be in a position of cutting off innovation in a way that we don't want to, or steering it in a way that we don't want to. To say that innovators are always, regulators are always lagging innovation, I think there's a reason for that. I think there is some wisdom to letting an industry grow a little bit and figure out where it's going and the best implementations of that technology in the market before we step in and step on too many things. So that said, I think we are taking a bit of a more engaging approach. The SEC put out a statement about ICOs. I heard one panel talking about that earlier in our Dow report, which is a report of investigation. The SEC investigated, I'll call it a coin offering. It was one of the first. And it was an issuance of tokens by an entity that claimed to really just be autonomous and decentralized. In fact, the code itself was deployed on the Ethereum blockchain by a group of individuals. And we opened an investigation. We looked at that. And the agency decided to take a more balanced and measured approach. We could have brought an enforcement action, but instead the agency decided to put out a report of investigation. And I think it was a way to give guidance to the community, given that this technology is global in scope. There could be some confusion among folks that are in this industry about the application of US securities laws to activities. And that's one approach that the commission decided, look, let's just put out some guidance, let's explain to the community how our laws that have been around forever, they're very flexible, they're principle-based. We're going to apply them to this situation as kind of a demonstrative tool.
So publish rather than punish in this
It was
instance.
publish rather than punish. And along with that, the agency decided to put out some explanatory materials in the form of a statement by its Division of Corporation Finance and its Division of Enforcement together, explaining the context of the report and what it meant, and also setting up, you can call it a hub. We didn't call it a hub, but we called it a FinTech mailbox, because that's what it is. It's fintech@sec.gov. And we've invited people to write to us and ask for meetings or just give us information, come and talk to us. So, kind of if you want regulators to embrace innovation, then innovators should embrace the regulators, right? So come talk to us. It's kind of an informal thing, but it's been going well. People have been coming in and talking to us. And really the purpose of it from our perspective is not only to gather information and communicate with the folks that we regulate, but also to tell people what our regulations are, give them guidance and point them in the right direction, or have them think about something they may not be thinking about. We're not going to tell someone, okay, after a conversation, you have our stamp of approval. That's not what this is all about. But, we're there to kind of hear what you have to say.
How long has this been running?
Since at least the Dow reports, that's around July of this year.
So it's not so long, but is there anything you've learned from it internally?
We've learned a lot.
Can you
yeah.
give an example?
So just hypothetically or
Sure.
Theoretically,
Exactly. We're not even here
people
today.
would come. We might have some entrepreneurs coming in either with or without counsel, talking to us about some proposal they have in terms of a new system or product that they'd like to integrate, for example, distributed ledger technology. And we'll hear what they have to say. We'll ask them questions, kind of talk it through with them, and maybe tell them, there are these regulations you'll have to be concerned about. If you're structuring like this, you may want to think about registering as a broker-dealer or an ATS or exchange or a crowdfunding portal. And so we just and another thing we could do is point them to the direction of another agency. So this sounds like something you want to talk to the CFTC about, or you need to talk to FinCEN as well. And so we're trying to create an environment where there's an open dialogue.
There's a whole industry of beltway bandits you're going to put out of business if you keep this up.
Yeah.
Who make money advising banks and startups. We have a question from the app. I want to see, maybe we can just put to you, anyone else who wants to comment, but it's asking about state-by-state regulation in the US, presumably. How do you eliminate the hurdle of state-by-state regulation? It's easier for fintech companies to scale across the EU than to scale within the US. Now, that's a bold statement. I'm not entirely sure that's true, but let's take it at face value. But Noor, you want to jump in?
Sure. So only because we've had experience with this. So just a little bit of background. The way the U.S. operates is you have to, if you want to be in the lending business, for example, you have to get state by state, and which is a prickly point for the fintech companies because it's very expensive and time consuming. Time to market gets affected if you have to go to all 50 states. And what puts a sharp point on this is that about a year and a half ago, there was a very noble sort of effort by the departing OCC commissioner, Mr. Curry, who was actually at the event last year,
Yes.
spoke on the topic about putting out a fintech charter. Now, in my sort of candor, the state regulators, we are very powerful. We are in a state where arguably the most powerful state regulator, the New York DFS, are very, very opposed to this because it goes against another very old American notion, which is around preemption. Right? So anything federal preempts states' rights, and states' rights is in the news. So it becomes very political very fast. But the states are not today inclined to let an OCC charter, the so-called FinTech charter, preempt their rights to regulate fintech companies' marketing practices within their state. So almost all the state regulators are opposed to this. They've actually filed suit. The Association of Community Banks, of which there are many, has filed suit against the OCC. And so so that's the background. How do you eliminate this hurdle? I think it will happen through this charter, just chartering. The FDIC is today listening to Social Finance and Square. The applications have been filed to become chartered banks. ILCs, which is a sort of a hybrid between a bank, a community bank, and a specialized lending organization. So it will happen, but there's going to be a lot of debate. There's going to be a lot of states that will want their rights preserved to monitor what's happening, because the sharpest weapon a regulator has is supervision and enforcement. So without enforcement, they can only, very few people are going to listen around fair marketing, disparate impact. These are all technical terms, but they are the lifeblood of a bank examiner. And that's driven by the state legislatures. That is what they are paid for, is to ensure fairness and ensure that the deposits are preserved. So it will happen. It's just going to take a little bit of time.
So a little bit of guarded optimism. Yes, please jump in.
If I can jump in, just to complete the story, because it's very entertaining.
Yeah.
That's
why I'm
the Conference of State Bank Supervisors actually filed suit.
Yeah.
And this is basically the conference of all the state regulators. And to a large extent today, FinTech in the US is regulated at the state level. They have their own parallel effort to rationalize this state-by-state regulation. And they've had a system that's been sort of a common licensing window that's existed for a while. It's severely underutilized. And apparently in the last year, they've been trying to modernize that system. So you have a single licensing window for certain categories of FinTechs for all across all states. So there are multiple efforts, and again, it speaks to that broader trend where regulators are trying to change the way in which FinTech gets regulated.
So also another guardedly optimistic comment, I think you're saying, right?
Absolutely.
Yeah. Valerie, any comment from the view from the top on what's going on at the bottom?
No, I mean, I think it's been covered. I think it is a challenge for innovators when there's a patchwork of regulation, including federal and state, and if they're going to operate globally, really around the world. So education and communication with the regulators is what I would suggest.
Hi, I'm Nandu Nair. I'm a professor, but I was with the SEC for a while. So the title of the session was risk, but the discussion of risk seems to have not been as pronounced as I would have liked. One thing I wanted to know is banks have risk capital put away. FinTech firms, I don't know. We don't know. So I was wondering whether you folks in the regulatory world had anything to say about that.
Okay, good question.
Let me take it up first.
Yes,
in Japan, as you mentioned, as the moderator mentioned, that the FinTech business is not as large as the we see in the other Asian countries. So at this moment, I myself and we as a Bank of Japan is not viewing the FinTech industry to be accumulating the good amount of risk, which could influence the macroeconomy if in the unlikely case they blow up. But we are trying to study the ballooning FinTech industry in the neighboring Asian countries so that we can be prepared for the future if our FinTech industry grows in Japan. And at this moment, what we are concluding is that what's happening massively in China, it's more or less the intermediation of the payments, so that the FinTech companies themselves are not accumulating the financial risk as the banking sector does. So it's not really a stock-based, it's rather the flow-based business is what we observe at this moment. So that we are, well, it's not really tentative conclusion yet, but it's tentative observation of ours, I would say. Tentative observation of ours is that we may not need to impose the same risk capital requirement over to those like flow-driven FinTech companies. However, we see the other types of risk, massive risk accumulated around the data security. But instead of accumulating the stock money, I mean, they are accumulating so much of the data, personal data, the financial data, and the more economic-related data. So we may need to think about the cybersecurity. From cybersecurity viewpoint, we may need to do something. So it's more of operational risk.
You make a very important point. People haven't emphasized enough today, I think, is that the enormous rise of fintech companies in some countries has created vast pools of data. And that creates, of course, economic opportunity, but also risk in this case. Do existing laws on data privacy, data protection in your country, do you think they're adequate? Or do you need different kinds of rules and regulations?
I think the framework is already here. Framework is already there. Like operational risk, included in the operational risk, there are so much of the security risk we discussed in the incumbent banking rules and the rules over the banks. However, given that the size of the data accumulation is very, very broad and the size is larger in comparison to what is being accumulated with the banks these days, so that we may need to think about something else, given the size and given the broadness of the data being collected, but we are not yet sure.
Kabir, what are you seeing across the emerging economies that you look at on this issue?
Yeah, as I was listening to both of you, I was thinking that, this is you hear this quite often. There's a sort of alarmist view, perhaps, that fintech is adding risk and bringing more insecurity to the system. But in my experience in the last decade working in emerging markets, on the whole, that hasn't really played out. And so the question is why? We've not had sort of systemic failure.
Prove the case. Why are you saying it hasn't worked out?
Well, we haven't had sort of systemic failures of systems. M-Pesa, for instance, in Kenya, which grew to be a massive payment system, we've had cases of fraud.
Right.
We've had cases of potentially of data breaches that we don't know publicly, but there hasn't been a sort of systemic issue. And so the question is, why has that happened? So one is...
It's been too small.
It's been too small.
Right.
And I think it lends itself to this conversation we keep having, especially in the financial inclusion world, because we have established incumbent commercial banks that are not reaching out to people who need financial services. We need to open the supply. We need to bring more people into the financial sector. Right. And just to complete that point, so you take a lens, a risk-based.
Right.
Supervision lens, a risk-based regulatory lens. So these are small ticket size transactions. These are overall small volumes. You allow them to be established. You allow them to bring people into the formal sector. And when they start getting to a certain size, often they do graduate, to a license category that requires different requirements. In India, for instance, they've introduced
so when you get
tiered
relevant,
banking
you get
system.
regulated.
I'm sorry?
Right? When you get relevant, you get regulated.
When you
Take
get
all the
sizable
Right.
to the system,
Right.
right?
Which is what we're talking
which
about.
is the logic, yeah.
Risk
Exactly.
to the system. Go ahead, Norm.
That's the point that wanted to be directly responsive to your question. The fintechs today aren't in balance sheet businesses, right? So there is no risk capital required. Payments, you're moving money. Lending, you're taking crowdfunding or somebody else's money, lending it out, and then securitizing it. So the classical lens of a regulator of, you lose money, can you bail it in, instead of the government coming and bailing you out. We're not at that stage of fintechs yet. So yes, risk capital and RORAC, all of those things will come in probably at the next stage that we were just discussing.
Let me ask my panelists, do you think we will see a stage at which fintechs, and it can be Alipay or PayPal or the newcomers behind them, will get too big to fail and will require bailouts?
So this is a question about bailouts? Or
No, it's
bailing
also...
out?
But
Well, it's a cheeky way of asking, sort of pushing the argument.
But
How long can they, on Noor's argument,
Right.
can they structure themselves and offload the liabilities
Right.
such that regulators don't have a clear and direct mandate to step in as they would with conventional institutions?
Hopefully we don't get to a point where we are struggling to answer that, in the system. So,
Well, you live in a very sunny world, my friend. I must say. He's a very optimistic guy.
net positive. The world is net positive.
Right.
That's the way I look at it.
I think the short answer is it's when you start adding to the money supply is when you start worrying the regulators. When the effects of Alibaba and all these guys are net inflationary to the PBOC, that's when they'll come out of their offices.
Valerie, any thought on this?
I mean, that's one reason to encourage competition among the fintech firms too, because the more you have, the more concentrations you'll have, the more risk you're going to have. I think the way we look at it is, as the technology gets implemented in various participants in the industry, then what are they doing, and do our regulations adequately cover that? So, for example, if someone's using, someone's custodying Bitcoin, do they have the mechanisms in place to provide, consumer safety for those assets? Do they audit them? How do they store the keys? Those kinds of things. Mm-hmm. They all kind of fall within our existing framework. And so we'll look at them and assess their risks the way we would assess risks based on what their conduct is. Flipping that around, though, I think that this technology can really help regulators in RegTech and SupTech, whatever you want to call it, applications. And in fact, the SEC has been using big data techniques to mine our databases for years now in spotting, in figuring out risk analytics, figuring out what firms we should go in to examine for targeted risk-based exams, and what companies we need to reach out to alert for potential risks. We just started a new cyber unit at the SEC in the enforcement division to address some of the things that are going on and the cybersecurity threats that are happening. So the agency is trying to be nimble.
Will they disclose any leaks quicker than you have in the past?
No comment.
All right, let's get another question from the floor, please.
Peter with the New York Hedge Fund Roundtable and Parent JobNet. Diversity in technology. There was a great article, I think it was Fortune or Forbes, about a summer ago. They'd gone down to Howard University and they interviewed people. They had a Google vice president who was down there for a while. He quit. Is there a way in Finance Disrupted where we can kind of disrupt a little bit and get more diversity generally across the board in the fintech world? How would we do that?
Evenly balanced here.
This panel is.
Yeah, this panel is very evenly balanced.
We're doing our part at The Economist, if you've noticed. But perhaps the industry could do more, I suppose.
Yes.
I mean, surely the industry can do more.
Absolutely.
Does anyone have a thought on that?
Yeah, I mean, a very quick thought. At Omidyar Network, we are an impact investing firm established by Pierre Omidyar, who founded eBay, and this is very top of mind for us. Both in the U.S. and globally, and this is diversity in every way, right? So we're looking at sort of who are our founder CEOs and what do the engineering teams look like. This is a conversation we have frequently and likely to have more. All my colleagues sitting here are shaking their heads. So it's a very good point, so I appreciate you bringing it up.
Have you found any solutions? As you think about it, that's the first step.
Yeah.
But there are challenges also, right? So can you give us a sense of what you're working on?
Look, venture capital deal making is about relationships and networks.
Old boys.
So it's, or old girls, So you
Sadly
need to
not
build.
enough old girls.
Yeah.
Yeah.
So then it starts there. It starts with who's on your team. It starts with who are the people and what do their networks look like,
Right.
and how connected they are. So that could arguably be one answer.
Hi, Christine Giordano with Chief Investment Officer Magazine. I was wondering, regarding the regulation of the fintech companies, can you kind of go into detail on what the flags you're using when you decide to investigate further? And also, generally for the panelists, what kind of things in the big data realm would we just learned about the micro loans and pulling data off phones in order to make micro loans. And what kind of missteps should somebody not do over their phone?
News you can use. Okay, let's see what we got. I guess, Valerie, I think it was directed to you a bit.
Sure. So I can't give away the secret sauce of what how we mine data, but it depends what we're doing. So if we're looking at a registrant population and we want to target for exams, then we're going to look at aberrant returns, inflated returns as opposed to peer groups, or unusually smooth returns. We might look at company filings and look at aberrations among a peer group to focus us in and look a little bit closer. There's always a human element, so the data is only going to tell you so much, but it's going to point out outliers. so that we can go in and do our analytics and figure out. There are various populations that have certain properties. If they have those properties, then we're going to examine them for example, custody. This is a high-risk group for having a custody violation. This is a high-risk group for having a compliance violation. So we can figure out what those metrics are. We can use our big data scientists, which we do have at the SEC. We have rocket scientists that work with us. We're very lucky. And so we can use those kinds of analytics. If we're looking from an enforcement point of view, obviously, without getting into any case specifics, we're going to be looking for indicia of fraud. Anything ongoing fraud where there's potential harm to investors or an ongoing harm to an investors, that's what we're going to focus on first. To the extent we have to triage many, many cases that come to us or potential cases. And then there are programmatically important cases. There are priority program areas for the commission that we publish every year. So we can use the data that we have, and it's usually gathered from the registrant populations and the filings that they make with the commission or with other agencies, and we write programs that run across that data and find indicators to us. And it just depends what we're looking at and why we're looking at it. That's what we do, yeah.
Any quick follow-up or any pointers on what not to do on your mobile?
Could I? Okay. Even though I said that I am not a regulator by myself, I quite often talk to my fellows at the regulation hats.
I suspected you did.
Okay. Regulation over the new industry is always very, very, very difficult because they are not the institutions as we traditionally rule over. So their functions can be very different from the current traditional incumbent banks' functions, and they may be unbundling the current banking functions into several parts, so that on each part, I mean, we really need to think about what would be the consequence of the failure of those functions in each function, and then think about whether we really need to regulate them to prevent any failure influence over to the society or not. So we must admit that we are in the learning process, so that I wouldn't say that this is the set of the questions I will ask whether do we apply the regulation over to the fintech companies or not. We are in the learning process, so that we are in a constant dialogue with the practitioners. So that's what we need to do going forward for the time being, I think.